Hi guys, welcome back to my YouTube channel. I just wanted to hop on here quick because ICT just did a amazing trade and I wanted to go over the trade. And I'm sure he'll be posting it later, but this is mainly for me to really grasp what he did. So I'm excited. So let's get into the chart and I'll kind of explain my thought process on the trade because I also took the trade. And it was cool because I kind of saw the trade before he called it out on Twitter, which you guys should all be following him on Twitter. He is amazing. So, and yeah, do you like my microphone? I'm using my headphones, so hopefully the sound quality is amazing. Okay, let me get started. First, I'd like to cheers you. Welcome back, and I'm excited. This is where I'll be doing most of my YouTube videos. I just got back from holidays with the family, so yeah, you'll be seeing here much more often now. So, welcome back. And let's dive right in. Okay. So, I'll start with the daily. Okay, so I have a lot of annotations. I will delete that right now. Okay. So if you were following ICT, he did point out these, all these levels right here. So the half of the weekly wick, which is called a consequent encouragement. Also down here, the weekly order block, which we actually almost hit today, which is kind of cool. And then I put on these levels, the 8:30 a.m. NY Open, and then ICT also did this buy-side liquidity target. So yeah, basically the thought process is it's probably going to come up to one of these levels that we already outlined on Sunday. You can go watch his video. Okay, I'm just going to drop down to the 1 hour really quick. And actually, let's drop down to the 15-minute. So basically, okay, this is not supposed to be there. Or this one, oh my goodness. Okay, so basically, we have this buy-side liquidity target. And this is a premium array target, which is old highs. I also think up here in this FVG above these old highs is also a premium array target because we're targeting the liquidity that's stored above these highs in this fair value gap here. Look, I'll draw it out for you. In this fair value gap, you know, there's liquidity in here, so price is likely to draw towards that and also draw higher towards this buy side liquidity old high target. Anyways, okay, so we have our directional bias, which is basically buy. Something cool also that I noticed is, I don't want to get too off track in this video, but I also noticed that this pattern comes a lot where it's like goes down and then creates a fair value gap, goes higher, creating this fair value gap, and this fair value gap is even stronger now because it also has this fair value gap to back it up. So it's kind of cool. I'm just going to mark this out because it did help me with making the analysis today. See how it kind of overlaps? That is gold. One sec. Gold. So we'll drop down to the 5 minutes. So 8:30 happens. There's usually a trade at 8:30 and 9:30 for the AM session, around those times. 8:30 happens, we get a nice little push up. There's a void here, come back down. Obviously this needed to get filled in. come back down into the 5-minute fair value gap here, which is also overlapping with the two 15-minute fair value gaps. I'm just going to speed up a little bit because I'm pretty sure, yeah, I'm pretty sure we were ahead. I think I took the trade around 9:45, but yeah, so let me just do that. But yeah, it's kind of cool because look at how well it respected these two fair value gaps and this fair value gap right here on the 5-minute. I mean, right there is like a pretty prime setup. Look, it takes out the old lows, take out that sell side liquidity, comes down below NY open, make a break of market structure plus fair value gaps galore. I mean, that is just prime market there. I'll show you. Because look, here's the sell side liquidity being taken out. Right? Boom. Takes that money. And then it passes up. We could even say that this is a break of structure right here because it just breaks it. Or we could even use this one down here as a BOS. Break of structure, because this is technically a swing high being broken. Comes back down into this area with the 15-minute fair value gaps and the 5-minute fair value gap right here. Comes right down. What's also cool is if you look at where it is in consideration to premium or discount, just on that swing move, look, it comes all the way down to discount area. Here's the fair value gap. I mean, right there is like a target. You can put it, you can put the stop loss below the swing move or below the candle that made the FVG, fair value gap. Or yeah, if you want to be super conservative, right at the bottom of the swing move. And you target just old areas of liquidity, which we could target these highs right here. And then boom, look, amazing. I have a cat watching me. So boom, amazing. That's a beautiful trade right there, 2.4 risk. I mean, that's all you need. And that trade was taken right at 8:50. We've seen it happen, come below the New York open, take out short-term sell-side liquidity, break above market structure, boom, comes back down into discount area, and this is all on the 5-minute time frame. So yeah, that's pretty cool. Anyways, this is not the one I was trying to watch, but that kind of helped me understand that the market is going to be going up. Okay, let's drop down to a 1 minute now. Okay, so another thing that ICT says to do is mark up your 8:30 a.m. opens, because you can also use your Judas swing for that. So because of that, I marked up the 8:30 open. I do NY open and 8:30 open. I make a horizontal ray. Here, I'll show you right now. So 8:30 happened. Remember, when it's a up close candle, the open is at the bottom of the candle. If it's a down close candle, the open is at the top. So I just put it at the bottom, mark it up, 8:30 a.m. open. I like to annotate everything because it gives me a clearer picture, and it also helps me and helps my mind really get into like that thinking, right? Okay, 8:30 a.m. 8:30 a.m. open. Now this is where he was talking about we're going up to the buy side liquidity. There's also buy side liquidity up here, so I'll just mark it out because there is, right? For buy side liquidity and sell side liquidity, I like to have them solid lines until they're taken, and then once they're taken, I change the line into a dashed line. I'll show you. Okay, so we are going boom, you know, nothing too spectacular there, and then we have this nice displacement up, which is nice. You know, it didn't quite break the structure yet, but look, there's this fair value gap right here to pay attention to. It came below 8:30 a.m. open. It took out this short-term sell side liquidity. So, you know, because it took out that short-term sell side liquidity, your bias is buy. You're kind of looking for your entry now, which is displacement, break of structure, and fair value gap. Okay, so possible fair value gap. We don't have our break of structure quite yet, but this is where ICT took his trade and where I saw the trade potentially happen. Like I said, it didn't quite break market structure. If you're using this as the if you're using this as the swing point, it needs to break. So there, now it breaks market structure, and technically if this would have been live, it would have came back down close into this range, so we can just buy one right there. And our stop loss is, I don't know how to add a stop loss. Anyways, so we buy one right there, and then we go up. So that's good because it was a nice push up away from this fair value gap, which is good. And then we kind of do a little bit of consolidation here. And then there's actually this liquidity void that's super small, but it's like right in this little area here. It's better on the actual ES symbol, but there's a small liquidity void there. We come down, we're gonna buy another one because we came down into this liquidity void. And if you look, we came back down, and look, there's this order block right here. So that's a buy. Plus OB, because it's a bullish order block. Okay. Remember, our stop loss is below this fair value gap, right below this wick. So then we're gonna keep going. Boom, nice push up. And there you go. It takes out this first short-term buy-side liquidity. This would be where you'd want to take partials. So you take partials there. Partials taken. I don't know how to take partials, so you'll just have to go with it on this. So partials taken. Nice big push up. That was really what we wanted to see. ICT has a stop at break even now, so it would just be like below this order block. We're gonna go into this liquidity void one more time, going back down into this order block one more time. I think he buys one more, and then we kind of just let price play out. We wanted to see it go to this buy side liquidity target, which then we just flatten, and then boom. How he stacked his was he bought 8 here, and then he bought another 4, and then he bought 2 more. So you kind of look at it like a triangle. You have your first positions and your second positions and your last position. You want to have this one at 8 contracts well, this is just what he did. I'm not saying we should do 8 contracts or anything. Then 4 contracts. And then 2 contracts. 8, 4, 2. Close them all here. And that's a really amazing day. That is 10% if you're doing like 1% risk on all of these. That's actually more than 10%. Anyways, I forget the logistics, but it's kind of cool to see him pyramid his orders. So he bought 8, then he bought 4, then he bought 2. Coming in again at this order block here, at this liquidity void here, and then of course this first one at the fair value gap. This might have been the safer bet answer, but if you're not used to like entering at order blocks, you may have missed this move, because it, as you can see, it doesn't quite dig into that. Wow. It doesn't quite dig into that fair value gap again. But it's kind of cool to see how different moves played out. Short-term liquidity taken out, boom, displacement, almost a break of structure, FVG, target that, come back up, re-entry at this order block, enter, partials taken, and then of course the last entry right here at this order block, liquidity void, boom, target taken. And that is a successful day. So yes, I just wanted to hop on here quickly and kind of go over this trade with you guys. I know ICT will be uploading a video probably much better than mine, but I also wanted this for future reference. So with that being said, I am excited. I think my next video I want to talk about bullish and bearish breakers. So the next video I want to dive deep into that, because I still don't have quite an understanding, but it can be powerful. Like, I noticed a few and I don't know if I'm doing them correctly, so gonna do my research and then post a video of the bearish and bullish breaker blocks after. So until next time, I want to say thank you again for watching, and yeah, I hope you're all enjoying my content. You can tell me if there's anything you want, maybe a little bit more detail of with ICT concepts. And yeah, if you like this video, just give me a thumbs up and comment, and I will get back to you in the comment section. So with that being said, I hope you all have a wonderful day and amazing trading day. All right, till next time, see you guys later.